Welcome to another analysis on the Dutch investors. Today we are discussing Heico, a serial acquirer that's active in many industries, of which aviation is the most important one. To start off, Bauke, do you know what a PMA is?
To be honest, Matthijs, I have seriously no idea.
Yeah, when you think about aviation, I think mostly airlines come up to mind. So the likes of Delta Airlines, American Airlines, Ryanair maybe, or maybe the plane manufacturers come to mind, like Airbus and Boeing. But PMA stands for Parts Manufacturer Approvals, and this basically comes into place after the patents of the original manufacturers expire. And that's exactly when Heico comes into place.
That sounds very interesting, Matthijs. So let's dive in.
Yeah, of course, we will explain it in more detail in this analysis. But first, this analysis is for educational purposes only. Always do your own research, and it is possible that one of us currently holds or will hold a position in the companies discussed. The Dutch investors is not responsible for your decisions. This podcast was recorded on the 23rd of February 2025. The current market cap of Heico is $27 billion, corresponding to a share price of $225.
So let's start off with the history of Heico. Do they have a long history? When did it start? And maybe you can tell us some interesting facts, Matthijs?
Yeah, sure. So the company was founded in 1957 in Florida, and the company started as a manufacturer of laboratory equipment. So during the next 3 decades, the company wasn't that great of a company. But from the 1990s, the Mendelssohn family took over the company and was going into the management of Heico. And from that moment, Heico started a complete different strategy of buying companies in two segments. The first one is the flight support group, and the second one is the electronic technologies group.
So, Matthijs, if I understand this right, when the Mendelssohn family took over, they started acquiring businesses?
Exactly. And one of the first things they did was divesting the laboratory equipment business that was the old Heico.
Okay.
So a few years after they took over the business, yeah, they partnered up with Lufthansa, a big German airline, and they started the PMA process with them. How much does it cost for them to buy spare parts from OEMs like Airbus and Boeing, or from Rolls-Royce, for example, which makes engines of planes? And they collected a lot of data from it. And Lufthansa even took a small position in Heico. And from that moment, Heico was just starting to acquire many businesses that were involved in the manufacturing process of spare parts, the PMA process, the distribution of spare parts, and even the maintenance of airplanes.
Okay. Also, that maintenance that seems very interesting. And do you have any idea, Matthijs, how many subsidiaries Heico has today?
Yeah, so far, Heico has made 100 acquisitions, and the biggest acquisition of those was Wencor just 2 years ago, and they acquired them for 2 billion.
Whoa! And just for our imagination, how large is Heico today? The market cap?
Heico has a market cap of around 27 billion. What is an interesting fact is that Wencor was the biggest competitor of Heico.
Oh, so they acquired their biggest competitor. That seems very aggressive.
Exactly. And how Heico has managed to become the company it is today, it will definitely come back during the capital allocation that we will discuss in this analysis, as well as the business model.
Okay, so let's do that. Let's dive into the business model.
So, as stated before, but to repeat it one more time, the company is divided into two different divisions. It also helps the company to bring more focus into the company. The first one and most important one is the flight support group. 67% of revenue is coming from this division. And the second one is the electronic technologies group, which is 33% of revenue. Basically, that second group is a bundle of many companies that make electronic parts for a variety of industries. Also for the flight industry. So that's maybe a bit confusing. You have the flight support group and the electronic technologies group, but the latter one does also produce and deliver parts that go in airplanes. So you can basically say everything electronic is in the second group, and everything else that has to do with flight support, so development of PMAs, maintenance, and support, is the first group.
And can you tell how much those divisions are growing? Is the electronic technologies group growing much faster than the flight support group, or isn't that so much the case?
The flight support group used to grow faster than the electronic technology group, but I think they are a bit more consolidating in that first one right now. So their main focus right now is on that second division, on the electronic technologies group. So in the years ahead, you can expect that second group to grow faster.
Okay, and do you have any idea why they switched to focus more on the other division?
I don't know. I don't think it's so much about focus, but they are so big and powerful in the FSG group right now. Like I said, they took over their biggest competitor. To give you any idea, Heico had like 12,000 PMAs, and their second biggest competitor, Wincor, had 7,000. And now their biggest competitor has only 2,000 PMAs.
And for the so maybe some clarification for the listener and also for me, a PMA. Can you see that as a kind of product?
Yeah, so I will try to explain it in a simple way.
Okay, go ahead.
So imagine Rolls-Royce. It is a manufacturer of engines, plane engines, and the parts that go in that engine.
Yes.
Uh, they most of the times they have patents for it, but the thing is they expire after 20 years. So what Heico does is they reverse engineer those spare parts after the 20 years, and they are trying to develop it cheaper for the same quality and reliability. Um, in order to be able to sell those products, you have to have an approval from the FAA, the US FAA, so the Federal Aviation Administration. And when they grant you a permission to sell a spare part, that's called a PMA.
Okay, okay. So it are basically one PMA is one spare part.
Yeah, exactly.
Okay, okay, okay. That's clear. And how is their revenue divided into the end markets? Is it all commercial aviation, or is it also? I've read in your analysis that it's also defense. Can you tell us more about that?
Yeah, so commercial aviation is the biggest part of Heico with 55% of revenues. Then comes defense with 29%. Space is 4%. There are some spare parts that can be sold for both the commercial aviation as well as defense as well as space. So that's a very great thing.
Oh, cool.
And the rest is categorized under other. So it's basically a large variety of end markets. Think about healthcare industry, the rail transportation, that kind of things.
But I think they also took a large hit when the coronavirus, the COVID-19 virus, hit in 2020. Didn't that hurt Heiko?
I'm not sure right now, but I think they even managed to grow the company
Oh, okay.
um, because Heiko's products are cheaper than the original manufactured equipment. So what you see is that many airlines who maybe used to buy from the OEMs started to go to Heiko.
Okay, okay. And one OEM is Airbus or Boeing.
Yeah, so OEM stands for original equipment manufacturer. So um, it's Airbus, it's Boeing, it's Pratt and Whitney, it's General Electric, those kind of companies.
Okay, okay. That's interesting. I thought Airbus and Boeing were, yeah, getting all the parts and putting the plane together, but they also produce parts themselves.
Yeah, some parts they produce themselves. That's right.
Okay, okay. So in that space, it's also maybe a huge competitor for Heiko.
It's both a competitor as well as a customer sometimes because Heiko also manages the distribution for many airlines and it also distributes products of the OEMs.
Okay.
So that's a bit of complication there.
Yes, yes. But it's much more clear to me right now. Thank you. Maybe you can tell us something more about how do these companies operate?
Yeah, Heico tries to let companies operate independently from each other, although some cooperations between the companies can be stimulated when it benefits the company. So it's very decentralized way of managing the business, I would say. Um, a good thing is that acquired businesses mostly keep a small but sizable part of the business to align the interest. So the management of the acquired companies mostly stay in place and keep managing the company, and they keep mostly 10 to 15% of the company themselves.
Okay, that's cool, and that's something we like when I think Heiko is a serial acquirer. That there aren't businesses that can destroy the whole business, the whole serial acquirer. But they also acquired Wencor. You told us for 2 billion. Isn't that a large part of the overall business today?
Phew.
And do you maybe think that the acquisition succeeded or failed? Have you any idea about that?
Not yet. I think it's too early to tell. They are merging some divisions from Heico and Wincor. Wincor was very strong in distribution of spare parts, um, and they had 7,000 PMAs, as I told you. So I think there are many synergies to be collected right there. But I think time will tell if this was a good acquisition. But out of my head, I think Wencor is around one third of the company now.
Okay, that's quite feasible.
Yeah.
Okay, so let's dive a little bit deeper into the different divisions. Let's start off with the flight support group, about 70% of revenues. What does this division actually do?
Yeah, the main strategy of Heico here is to develop and manufacture jet engine and aircraft component parts and sell it at a price that lower is than the ones of the OEMs. And that's put very simply. Uh, but like I said, it's not only the PMA part, it's also the distribution and the maintenance. And the good part about maintenance of airplanes is that it's very easy to plan and schedule. They must comply to very strict rules if it's about maintenance. So you basically have a bit of recurring revenue there.
Mhm.
You already know that after 1 year you should replace component X and Y. Then after half a year you should replace component B. So that's a very good thing about the business.
And I think I read in your analysis that it was about 10% of revenues, something like that,
The what?
the maintenance part.
Maintenance part is 15% of the business.
Okay, yes.
They call it. They divide it in MRO, which stands for maintenance, repair, and overhaul.
Okay, okay. That's clear. And you already told us about the patents. Heiko is does it quite smart. They reverse engineer spare parts when the intellectual property expires. But when the patent expires, can they just copy it, the part, the design?
I'm not 100% sure to be honest, but I do know that the process of creating such spare parts and especially getting approval from the FAA to make it a PMA, uh, that is very hard to do, and it is a very long process to get such a product approved by them. Um, but the big advantage of Heiko is that they don't have the high development costs for the patent because the information will come outside um, and Heiko can sell it for a better price afterwards. And with better, I mean a cheaper price for airlines. And as you know, and I think as a listener knows, the airline industry is very competitive, very low margin business. So when they can decrease the cost by buying from Heiko, um, many of them do it.
Yeah, sure, sure. I understand. So when you put it like that, Heiko isn't a very innovative company. They just, they just copy designs, and that of course has huge advantages, like that it can be done, a lot cheaper. Is that right?
That's completely right. And for example, they deliver and distribute many parts of the F-16 planes, which are quite old fighter jets right now, but there are still hundreds in operation. But for the new F-35 plane, they don't sell any spare parts. And maybe some,
Okay.
but almost none. So Heico comes into play after 20 years when the patents expire.
Yeah, with the older planes, with the older parts.
Exactly. Yeah.
Okay, that's clear. And you told us about Boeing and Airbus being competitors, those OEMs. How do they react? Are they? Do you think they are happy with Heiko, or do they don't like them that much? How? What is their relationship?
For the PMA part, I don't think they are that happy.
No.
But Heico is really trying to please them with that. So they are not producing any components that are the most safety critical components of an airplane. So if you talk about rotating pieces in the engine, that kind of things, they do not make that. Um, and why is that? Because that's where the highest margins are for the OEMs. So they leave that to the OEMs. And the second reason is that FAA approvals take longer when you create that really safety critical components.
God, that's so funny. That's such a unique relationship. Like they don't want to disturb them too much. They don't want to, yeah, get that relationship too bad. But they, on a lot of parts, they are competing with each other.
Yeah. And they another good point is that they don't try to gain more than 30% market share for one spare part to prevent price wars with the OEMs. So
Yeah,
it looks like they don't want to wake them up.
yeah, that's so unique. They actively think about that. That's funny, I think.
Yeah.
And maybe can you give us some examples of spare parts that Heiko manufactures?
Yeah, sure. So like we said, they do not make the most exciting stuff, and we will see it here. You can think about door assemblies, seals, the smoke detector boards, uh, cockpit pushing buttons, fitting assemblies for the wings, toilet switches, even the mirrors of the plane,
Oh wow.
fuel pump gears, and very basic stuff. Or well, it's not that basic, but um, the springs, the pins, the bolts, that kind of things.
Hmm. Yeah, sounds very sexy. Those buttons, I really like them. Very cool.
Yeah, it's really the boring parts of the planes.
Yeah, but for investors, that's sometimes a very good thing. So
Yeah.
that's so the commercial part is the largest part of revenue for Heiko, but they also have the government and especially the U.S. government as a customer. Maybe you can tell us something more about that.
Yeah, Heico is the biggest US defense contractor when it's about supplying and the distribution of aircraft spare parts. And I think that really underscores the quality that Heico brings to their customers. Because if the US defense is going into business with you, that really says something about your business.
Yeah.
And quality is by far the most important topic in aviation. So parts that fail during flights could be absolutely fatal, making a plane crash in a worst case scenario. And during Heico's existence, let's say since 1990 in this case, they sold over 86 million spare parts, and there have never been serious safety violations.
That's a unique and so good stat for Heiko.
But it's difficult to have a safety violation with toilet buttons, right?
That's true. That's true. Oh wow, that's a good one.
OEMs, on the other side, they had their quality issues because if no one has quality issues, then planes would never crash, and that just happens sometimes. But the big difference here is that OEMs make the critical parts.
Yeah,
They create the actual engine, and if an engine fails,
yeah,
then they will be noted.
yes, it sure does. Uh, and also with the, I think right now Boeing is somewhat standing in a bad daylight, to put it that way. They, yeah, we see some problems with the planes they are producing, and at least it gets put like Boeing is the one to blame, but maybe there are just spare manufacturers that could be the one to blame.
Yeah, exactly. If a plane crashes, you always see two elements in the news. I think it's the airline and it's the aircraft manufacturer. So it's is it the Boeing or is it the Airbus? And
Hmm.
I think they're never naming um, the spare parts or module suppliers of that aircraft. So you never see the engine maker Pratt and Whitney in the news, for example. It's always Boeing.
Yeah, yeah, exactly. That's what I meant. Another question I have is about Heiko's pricing strategy. What can you tell us about that? You told us already it is somewhat cheaper than the other OEMs, so that's a great thing, of course, at least as it is safe. But what can you tell us more?
Yeah, so Heico's products can usually be bought for a discount of 30 to 40% compared to the OEM products, which is a large discount. And I'm just thinking right now, I'm not sure how they are managing to keep under the 30% market share while also being that kind of cheaper compared to OEMs. Uh, and sometimes this discount even gets bigger because when Heico reaches a scale, when they can sell spare parts to many airlines, sometimes they even lower their prices to around 50% cheaper compared to competitors.
We are someone getting ahead of the facts right now, but do you think they have skill advantages shared? Like the way you phrase it like that, it sounds to me like they have. But what are your thoughts about that?
Yeah, for sure. They are sharing because to get a PMA, it costs a certain investment you have to make as a company.
Hmm.
And when you can sell the spare part one time or 1 million times, to put it in extreme, that really brings some skill advantages with it. And they use to share those advantages with their customers by lowering the price even further.
Yeah, and you know how unique that mode is, right, Matthijs? There aren't a lot of companies that do that.
I think you once wrote a analysis about Costco, who is also a good example of skill advantage shared.
The perfect example, yeah.
Yeah, then I think Heiko for this segment could be also an example.
Yeah. Okay, now I'm really getting enthusiastic about this company, Matthijs. And I think we've talked much about the flight segment. What does Heiko do in the other division? Maybe you can keep this a little short, Matthijs, because we are already out of time.
Yeah, I will spare you some editing time. So
Oh, thank you.
the electronic technologies group is much harder to grasp because it's a combination of many different companies that create electronic devices or electronic components. It is an interesting division because they even have higher margins than the flight support segment. So it's basically a combination of many niche companies. And in Heiko's 10K statement, they described it as companies that must successfully operate in the harshest environments and are critical parts of larger systems where they integrate in. So maybe I will not go through all acquisitions then, but to name an example of this, of a component that is produced within the electronic technologies group but used in airplanes is, for example, the LED lights that you see above your head in an airplane with the seatbelt on and the toilet open or not. Those are products that um, companies in this segment are producing.
Okay.
If you want to know about the acquisitions that Heiko made within this category, then definitely refer to the written analysis. We described it there, and you can also see how much stock the former owners of the company still own after the acquisition.
Good that you mentioned it, Matthijs. So now let's move over to the industry. Yeah, Heiko is, I think, operating in some kind of niche market. It's of course quite big, but they are a big player in a niche market. But how big is Heiko actually?
Yeah, so we can talk about the number of PMAs. I think that's a good indication of how big the company is for this part.
Yeah.
They had 11,000 PMAs in 2023, But with the acquisition of Wencor, they added another 7,000, bringing it to 18,000 back then. Well, it's increased now to 20,000. And the great thing and fascinating thing is that the closest competitor right now in the PMA business has around 2,000 PMAs. So it's 10 times as small, basically.
Whoa, whoa, that's crazy. That's such a large difference. And what about the maintenance stem and market share?
Yeah, the total addressable market is massive with $88 billion annually. And with Heico's current revenue, they have captured around 5% of the global market. So you could say that there's still a long way to go to capture more market share for them. And this market is expected to grow with around 5% for the coming 10 years.
Okay, so they are very big in the PMA business, but they are, if I understand you right, Matthijs, quite small in the maintenance business. Maybe you can explain where that difference is coming from.
Yeah, it's actually quite logical because the parts that Heiko produces are not that complicated. So by far, most of the maintenance is addressed for the engine, the wing dynamics, the landing gear. So those critical aircraft parts. Um, they just need to satisfy way more safety regulations, need to undergo way more maintenance trajectories. So that's the main reason.
Okay. And do you think they can grow into that market, the maintenance market?
They can. I think they can. I think especially overseas. So apart from the US, I think they made one acquisition in France in 2022. They can do more here, but I think in the US,
Okay, Matthijs, and you have also talked about the yeah, a small part of their revenues comes from the space industry. Maybe you can elaborate on that.
yeah, currently 4% of revenues is coming from the aerospace industry. So companies like SpaceX and Blue Origin are customers of Heiko. And these rockets and satellites, they consist of, well, a decent amount of Heiko components. And according to a new report of McKinsey, the space segment that is relevant for Heiko is positioned to grow with around 7% CAGR in the next decade. It doesn't seem that much, right? But I think if the space race continues as it does now, then those 7% is really compounding over the long term.
Yeah, I think you are right, and it's also I think it's very hard to compete with Heiko and all those brands, all those subsidiaries beneath it. I think we can talk more about that in the competitive advantage. So let's move over to the mode. So I can already sense some competitive advantages that Heiko has here. But what is your view about this?
I agree. I think they have multiple kinds of competitive advantages here. Two correlating ones are probably that Heiko is the lowest cost provider, first of all, and at the same time delivering the same or maybe even better quality. And with that comes skill economy shared. They are already 30% cheaper than OEMs on average, and sometimes they even become 50% cheaper than them. And this also accounts for the MRO business, of course, so the maintenance repair business. It's way more efficient to manage repairs and maintenance as a single company. So when Heiko does it, than when you do it by yourself. For example, I'm not sure if you know, but KLM has its own maintenance division, and they are also doing maintenance for other airline partners. So maybe that Heiko at one time when they try to conquer Europe can take a part of that.
I didn't knew that, Matthijs. That's interesting. Some other modes they have. Maybe you can talk about those.
Yeah, so we talked about the high barriers to entry. So it's all about safety in the aviation industry, and that's also what counts for the FAA, of course. They have a 75% market share in the PMA business. They have the network and the relationships, which is very important. And it simply helps them a lot in speeding up the process, um, and especially compared to new companies in this industry. It just takes a lot of time and effort to reach the same amount of trust um, compared to Heico.
Yeah, and also I think you can utilize that to get higher prices, but Heiko, of course, doesn't use that. Yeah, I think in some way they have pricing power, but they don't use that. Don't you think?
Yeah, maybe you're right. You're right. I think you are right.
Even if they are 30% cheaper, you have pricing power, right? Even if you increase prices by 10%, you are still 20% cheaper.
Yeah, maybe there are some strings attached. I can understand that it's maybe convenient or it feels safe that you buy it from the OEM,
Hmm.
but I actually don't know if they could do this. What will happen to the demand when they are increasing the price?
Okay. And I also read in your analysis that you think the incentives and management is a mode of Heiko. That's unique. Please elaborate on that, Matthijs.
Yeah, it's not a traditional mode. That's true. But how often do you see acquiring companies that ensure meaningful company ownership of the management after the acquisition? They really they do it for every acquisition. They make sure that the management uh, is involved and has skin in the game.
But how does that work, Matthijs? Is it like the management of the acquired company gets shares in Heiko, or do they still get hold shares in the acquired business?
They hold shares in the acquired business, and in some cases, they can also be given Heico shares. They can also buy Heico shares. Um, we will later see that Heico has produced many millionaires under its employees by the share options that they offer.
Hmm.
So that's a great thing. They really foster this ownership mentality within the company. You see it back everywhere. And what I like about the management is that they do not only care about shareholders, they care about all of their stakeholders. So, including their customers, including their suppliers. So we also see that, of course, in the lower prices. You just ask why don't they raise prices? Maybe they can do it, but they try to see the whole picture.
Yeah, yeah. Every company says they align interests with the all these stakeholders, but even Costco says it to these suppliers. But uh, so you really are quite enthusiastic about the management, Matthijs. Are there any other things you like about the management team, or?
Yeah, to describe the management. So for over 35 years now, the group CEO of Heico has been Larry Mendelson. He took over the management position in 1990 and has, with his sons, built Heico to the company it is today. So his sons are Victor Mendelson, who is leading the Electronic Technologies Group, and his other son is Eric Mendelson, who leads the Flight Support Group. So, like I said, they are really bolstering this ownership mindset throughout the organization, and that's something I like. And what I like even more is that you can see it back in what they actually do.
Okay, I see some co-CEO partnership forming here in a few years when Larry, the current CEO, retires. Maybe they do that, or have you a favorite upcoming CEO, Matthijs?
Do you mean I have to choose between them, or
Yeah, maybe you have watched them and like one more than the other.
they are quite identical? I don't know. Maybe they are twins, but
Okay, cool.
they speak almost the same. For my feeling, I listened to one interview of Victor Mendelson, and I couldn't find any interviews from Eric. I know he's there with quarterly calls, or oh no, they actually don't do quarterly calls, but um, with financial updates you hear him sometimes. If I had to pick one, I would maybe still prefer Victor because
Because he gave one interview.
he gave one he gave one interview. That's right, and he built up that flight support segment. I think it's just it was a very smart move by vertically integrating every part of that supply chain.
Okay, yeah, that sounds good. How is the skin in the game with the management team? And maybe you can also talk about skin in the game with the employees, because I read in your analysis the employee also own a lot of stocks, isn't it?
Yeah, what do you think about companies that give the employees stock?
Yeah, personally, I really like it because yeah, it bolsters the shared mindset of increasing the share price, increasing the yeah also the long term yeah, fundamentals of the business. I think with that comes an increasing share price, but I really like it.
Unless they utilize a lot of share-based compensation, of course, right?
Yeah, yeah, that's terrible. Yeah.
Yeah. So I have good news for you. Heiko doesn't do that much. It's
Cool.
a very minimal part of their net profit. Um, what's also quite nice is that they give their employees a lot of compliments during interviews and calls. They are basically giving all the credits to the employees. So, like Victor Mendelson said in the interview that I listened to, the most important people are the people producing, developing, and selling, not us. And you also see it back in many calls that they are so proud of their employees, etc., etc. And if it's only words, then it doesn't count, right?
Yeah.
But the thing is that Heiko employees own more than 2% of the total shares. And the next fact is absolutely crazy because over 400 employees of Heiko have over 8 million of Heiko shares in their 401k, which is basically a retirement account.
But you told us they don't do a lot of stock based compensation. Do they have a how do they do that?
You you should watch the stock price development of Heiko in the past 35 years.
So they hold their shares just for a very long time, or
Yeah, the 401k is a retirement plan, so um, you cannot sell those positions until it matures. It's mostly not in a few years,
hmm.
but much later. So the stocks were just compounding, compounding, and compounding, and they produced a lot of millionaires.
Okay, okay, okay. But they don't do a lot of stock based compensation, but the employees hold actually yeah quite a substantial amount of shares in the company, more than 2%. That is long term employees that didn't sell their shares. That are your thoughts.
Exactly.
Okay, okay, cool.
And to give you any idea, the share price of Heiko since 1990 is up by almost 100,000%.
Yeah, it's a very good investment to put it that way. That's I know that you are quite enthusiastic about this company. I think you in some ways love it. The valuation we have to discuss, of course, but it's just been a monster for shareholders in the past.
Yeah,
Absolutely stunning.
yeah, exactly. And it's not only that they increase their net profit, because most of the times the stock price follows net profit, but it's also a lot about multiple expansion in the past decades. So
Yeah,
they had tailwinds from both sides.
yeah. I once read that the multiple is the story yeah they can tell to investors. Yeah, like the net profit is what they actually delivered, and the exit multiple, so the current PE ratio in that is the story they yeah get to investors, like how bright is the future, and that is very bright. It seems like investors think that.
Yeah,
Okay, okay. Maybe we can talk for some time about the acquisition process. Yeah, what do the Mendelins, yeah, what does the family look for, and how goes that process into its work?
yeah. I'll keep it short. What they are looking for is companies that produce high cash flow margins, companies that treat their employees and customers in a fair and well way. They're not going for moonshots or for businesses that are away from their core, so away from their flight support group or electronic companies. And the aim is to own the companies forever. And this is underscored by the fact that they have only divested two companies, of which one was the laboratory business that they didn't even acquire themselves.
Mm.
So the management of companies keep some shares from the subsidiary, and Heiko does it because They want to let the management feel it when sales are down or where a product is not good enough. So they should feel the pain, not only emotionally but also financially. And I think that's a great thing.
I think that's for serial acquirers a perfect solution to
Yeah,
do it like that.
yeah. So most of the times they don't acquire the whole business. So mostly it's 80% or 90% of the business. And I think I would love to see this more with other serial acquirers as well.
Yeah, me too. Me too.
So the employees own shares, the management of acquired companies own shares. What about the management itself? So what about the Mendelssohn family? I will not disappoint you, Bauke, with this one, because all three have both directly as well as indirectly a lot of share ownership. Larry Mendelssohn, the CEO, has a worth of almost 900 million US dollars, and his sons Victor and Eric both hold 300 million directly.
So that's a lot of skin in the game. That's perfect.
Yeah. And also for them, of course, the compounding has helped them to reach this amount.
Of course.
And the incentives, to keep it very short, are based on net income, EBITDA, and cash flow from operations.
Speaking about cash, how does Heiko's financials actually look like?
Yeah, the financial year of Heico is measured from the 1st of November until the 31st of October. And in 2024, they realized net sales of almost 4 billion. And the net income over the same period was around 550 million, which means a net profit margin of a little more than 14%. What's great is that the free cash flow margin was even better, with 16%, which corresponds to around 600 million in free cash flow.
Now you are summarizing this and talking about this. I've just analyzed Shimano, and that's also equipment, yeah, some kind of spare part manufacturer. And you have analyzed Heiko. It's the same, and they both have actually pretty good margins. And yeah, also here, to put it like this, bicycle manufacturers, so the one that completes the bicycle, yeah, it's basically a commodity. It's very low margin, and that's the same with Boeing and Airbus, I think, and Heiko, and in my case, Shimano are, yeah, having solid margins. I think that's unique, and also tells something about the mode they have.
Yeah. Why is this? What do you think?
Yeah, yeah. In the case of Shimano, it's more that it's not very hard to produce or to put a bike together and to produce a bike. That's very, yeah, very easy to.
But that makes it even more difficult to realize high margins, doesn't it?
Not for the less commoditized equipment manufacturers, I think. And I think putting a plane together and collecting all the parts of a plane and getting the knowledge in house is way harder. Maybe, yeah,
Yeah,
they just compete more on price or so or something. What are your thoughts?
I think because it is harder, there are less competitors, and that's why Heiko can increase their prices and realize higher margins. I think it's very unattractive to go into this market as a new company.
Yeah, yeah. Basically, pricing power, less competition.
Yeah.
Okay. And did margins increased in the past decade, or how did it evolved?
Yeah, the revenues of Heiko have grown with around 14% per year, while the free cash flow grew with 17% per year. So they are getting more profitable, you could say. And their free cash flow outperformance compared to net income is also structural, which is what we like to see as investors. Then the debt position, Heiko has 2.2 billion in long-term debt, and that 2.2 billion seems high, but it is lower than the 2.4 a year earlier. And uh, the high debt levels are mostly because of the Wencor acquisition, which was financed with the biggest part with debt. And before that, the debt position was just around 200 million. So you could expect the debt position of Heiko decreasing year after year from now on.
Yeah, I think that's pretty important to follow as an investor. I'm myself quite curious how this evolves in the coming few years. You are very passionate, very happy with the management so far, but how is their maybe most important job, the capital allocation? What are your highlights here, Matthijs?
Yeah, I attached a table in the written analysis, so definitely read that one. But yeah, here are the highlights. So, including the big Wanko acquisition, the on average 136% of the operating cash went to acquisitions in the past 5 years,
Wait, including or excluding the big acquisition from Rancor?
including the acquisition.
Okay, 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 good.
And if we exclude this, we can say outlier, then 54% of the cash was spent on acquisitions.
So good that you calculated this as well. Great.
Yeah, sure, sure, sure. That's our job.
Yeah.
And apart from acquisitions, there's nothing actually that remarkable. So the dividend and the capital expenditures are both gradually increasing. Um, I would say with the increase in net income, and they buy back some shares, but it's mostly as an instrument to provide stock options as bonuses.
Okay.
Then for the last part, I think capital allocation is mostly in this case about acquiring the right companies for the right amount of money. And I think if we look at their performance in the past decades, um, they've done an exceptional job in that.
Yeah, I think the same. Just how many companies does Heico acquire each year, roughly, Matthijs?
It depends, but it's mostly a handful of companies.
Okay, okay. That's good to know. And what's even more important than the number of acquisitions is the profitability, of course. Maybe you can talk about Heico's return on invested capital.
Yeah, it has been 10 to 13% in the last couple of years, and this isn't a great level of rentability when you look at it first. Um, but as we know, return on invested capital is based on NOPAT, and Heigo has a 130% free cash flow conversion. So if we calculate the ROIC based on free cash flow, then the percentages look much better, and they are moving towards the high teens. So that sounds more appropriate.
Yeah, that's good to know. So now let's move over to the risks and opportunities for Heiko. What do you see as the two most important risks for this company?
All right, I think the biggest risk is a failure of parts. So when a screw or when something gets loose and that causes quality issues, then it could really damage their reputation. And we know Buffett's famous saying, it takes 20 years to build a reputation, but only 5 minutes to ruin it. This could really damage the business and break the trust of the FAA in Heiko.
Mhm.
Then the second one, you limited me to give you only two risks. So I would say the Mendelssohn family leaving the company.
Yeah, I think you are right there. I think this is the most important risk as well.
Yeah, you think the family leaving is more important risk than the first one, or
Yeah, I've heard you talked about them for a few minutes or right now, and I think they are very influential to the business success. No, I think the failure of parts, if that happens, that can really ruin this business. And the Mendelssohn family leaving, I think maybe there are some solid successes in the company as well. So
yeah, and especially the importance when it's about the ownership mentality and just fostering a good climate. I think the companies can run itself perfectly fine, but if it's about growth of the company and making it a good investment, then it's critical that they stay with Heiko.
yeah, nothing to add. Now let's go to the opportunities. Also here, you can only highlight two, Matthijs. Maybe choose your winners.
Choose your winners. Okay, all right. All right. The first one is obvious, so I'll pick two others. So I think the first one is um, there could be potential multi-baggers into the Heiko portfolio, especially in the electronic technology group. They really produce advanced electronic products for niche industries, and it could happen that they find out some spectacular new way of managing electronics. I don't know. And when it happens, that could really lighten up Heico's portfolio.
Hmm.
Then the second one, I would say, an opportunity is to expand more overseas. So they are mostly active in the US still now. They don't provide a division in where the revenue comes from, if it's about the geographies. But they made a big acquisition in France in 2022, and they could further strengthen their position in Europe and maybe also in other parts of the world.
And with the focus on the United States, do you think they are also an important supplier more to Boeing than to Airbus?
I don't know, to be honest.
Or yeah, is no, okay.
Yeah,
Maybe they ship them to over the sea to Europe. Okay, okay. Now we have come almost to the end of this analysis. Let's move over to the valuation. I saw that Heiko has a price to earnings ratio of about 60. Isn't that just a lot?
yeah, it is. And like we said, multiple expansion has been huge for Heiko. Over the past 10 years, the PE multiple has grown with a 9% CAGR and the price to free cash flow with an 8% CAGR. If we look at price to free cash flow, it is around 45 right now. So that makes it already a bit better.
Cheap. It's cheap.
But yeah, it's yeah, but yeah, you're right. It's still expensive.
Yeah, it's based on no growth. It's very expensive, but of course, in the scenario analysis, we expect growth. Maybe you can guide us through your scenario analysis.
Yeah. So in my realistic scenario, I calculated with 10 years. I think it's a mature and quite stable business environment to operate in. Like we said, it's quite easy to calculate what your revenues is going to be if it's about airplane maintenance, for example. I calculate with a free cash flow margin of 18%. They managed to do 21, 22% before the Wenco acquisition. So I expect them to get a little higher maybe, but to be conservative, I used 18%. And I have an end price to free cash flow ratio of 27, which is already quite rich, I would say, especially after 10 years when the company has less growth opportunities. But at the same time, it is a company with
Hmm.
huge competitive advantages. So I think 27 is fair. And with those assumptions, you can expect a 3.1% CAGR in the coming 10 years. And it is just lower than the current return on US Treasury bills, which are at 4.5%. So I think that this company is a bit expensive right now.
No, that's of course not a good return. And I think also the valuation is in some way a risk for this company because if they don't execute right for a few years, the share price could, yeah, with these multiples, it could easily drop 20, 30, 40%, maybe even. So
Yeah, I agree. And you saw them growing with 14% per year in the last 10 years. So I calculated with 7% for the next 10 years. So it's half of it, but that's because the Wenco acquisition was very big and
mhm.
substantial. So a lot of that 40% growth was because of that. And it's just more difficult to grow now.
Yeah, and it's very good that you take that into account, and also the right now there are just shortages in the yeah, Boeing and Airbus are screaming for materials and parts, I think, today, and maybe that will vanish in over time. So it's good that you are conservative, I think, with your approach here. Any other things to say, Matthijs, about the valuation, or shall we move over to the conclusion?
Yeah, let's go to the conclusion.
I'm very curious, Matthijs. At which price today would you have bought Heico. The share price today is about 225. Yeah, maybe you can tell us. Would it be 200?
No, not 200. I have to disappoint you again. We don't give price targets, of course, at Dutch investors, but if the price would drop to around 150 to 170, then I would start making a position in the company. And I'm almost sure about that unless I see better opportunities, of course. And with those prices, then you can expect a 7% CAGR.
Mm-hmm.
But I think it is worth it for a company of this reputation and with these competitive advantages. And I think I don't have to repeat what we told in this analysis about how great Heico is. But I'm curious what you think about the company.
No, the company isn't great, Matthijs. No, I think really it is one. It is really one hell of a company. The mode is extraordinary strong. The management is very capable. Only the valuation is just, yeah, it's just way too high. So completely agree with your conclusion, and I'm gonna put it on my watch list to maybe invest in it at a better valuation. So that are my thoughts.
Yeah. All right, then we can agree, I guess.
Yeah. Again,
The good thing is that we don't have to add Heico to the watch list because it's already on it.
That's nice for you, Matthijs.
Exactly. But with that, I think we can wrap up this analysis. Bauke, thank you for your questions, which are always top of mind. And listener, also thank you for listening to the end. We really appreciate it. And next up is a industry report or an industry podcast about energy drinks. So we will discuss Celsius, Monster, Red Bull. All drinks will pass by.
That's very tasty. Okay, that's Luke. That's gonna tell us more about that, right?
Yeah, exactly.
Okay, our energy addict.
Let's hope.
No, that's not true. But I'm very curious.
Yes.
Okay.
Let's see. Thanks again, and have a nice day.
Yes. Bye bye.